Hey guys, what's up? Welcome back to another awesome weekly market analysis with me, Tremaine. And as usual, guys, we're going to be getting into some very interesting pairs, guys. We're going to be looking at the DXY, Aussie CAD, Aussie JPY, Swiss Yen, and New Zealand dollar CAD. And as usual, we're going to be adjusting to the current market price action and just staying on top of our game, guys, just adapting and accommodating as the structure develops on each of these pairs. So let's get started, guys. We'll get into the DXY. So guys, from a daily perspective, and we're going to stick to the daily and the 4-hour at most, and the reason being is because we want to identify those higher time frame points of interest. We want to first of all establish a directional bias based off this higher time frame structure, and as well as we also want to find points of interest that are at higher time frame structure. So that's the reason why we're going to stick to the 4-hour and the daily. So let's get started on the DXY, guys. So we can see our important support and resistance areas here. If we just zoom out a bit, let's just get this drawing tool. What we have is a market that established some support, came up, created resistance, created new support, and we have some new resistance. Now what's important to us is this previous area of resistance. What we are looking at, how is the market coming towards this area, and basically what is the market doing when we get to that area of higher time frame resistance. So now that we've spoken about that, let's go to the most recent price action and we'll see what's been going on here. So in the most recent price action, guys, we spoke about this expanding structure. So let's just mark this expanding structure out. We'll just accommodate for our extreme resistance areas and as well as our extreme support within this structure over here. And we then identified this expanding structure. Now what we were looking for over the course of last week, and I guess even the week before, was for prices, because we had a nice set of equal lows. So let's just mark those equal lows out. So we had this resistance, we had some support, we had some new resistance up here, we then had some higher lows, and we had equal highs. So as the market moved away from these equal highs, we expected the market to one more time take these equal highs out and then begin the reversal structure to the downside. Now what we can see is that we didn't quite get that touch of our expanding structure, but nonetheless we expanded price action, and that's what's important when we're speaking about these expanding structures. Are we seeing both higher structures and lower structures being expanded either to the upside if it's expanding upwards, both highs and lows if it's expanding sideways, or just the lows if it's expanding downwards? So now that we've identified this expanding structure, guys, we can identify that price action is right now at the support structure of this expanding structure. Now if we go down onto the 4-hour and we just look at the nature of price action and how market has been making these moves to the downside, what we will notice is we can see a lot more impulsive price action making a move to the upside. We then have a big corrective structure and another impulsive move making this next push to the upside. What we see on our right hand side though is prices beginning to descend towards our important support structures that we've established from those higher time frames. Now what we're going to do, guys, is we're just going to add a nice resistance trend line over here, just so that we can be able to manage our 4-hour bias, understanding that price is at the support of our expanding structure, and as well as our horizontal support structures. You guys can see that we have these supports both on a daily and I guess also on a 4-hour. We have accommodated for this support structure and as well as this low over here. So we're understanding that this support is a buy sensitive area, and if prices were to come into this area here and then give us some sort of a reversal structure, we would have the probabilities on our side to begin to be looking for those bullish bias trades. So that's exactly our bias for next week, guys. We're going to be bullish bias on the DXY, expecting some dollar strength, waiting for prices to first of all violate our resistance trend line, and as well as any horizontal resistance that we might find there, break above, and then obviously once we see market breaking above these structural areas, we're expecting a higher low to form. However this higher low forms, guys, we're going to be looking for those reduced risk entries once we see prices both violating this trend line or giving us that reversal structure at our support area. So guys, we're bullish over the course of next week for the DXY. We just need to wait for prices to basically just pull up into our zone of interest and then give us that reversal structure to confirm this bullish bias. Now that we've looked at the DXY, guys, let's go on to the next pair that we're going to have a look at, and that is Aussie CAD. Now let's start off on the daily just so that we can get a quick reference as to what's been going on. So guys, on AUDCAD, if we just scroll out and we look at some higher time frame structure, what we can see is that prices have recently just broken back above a support area. So if we look to the left, we understand that we have a nice big support structure here where we see buyers coming into the market being able to violate some previous resistance areas where we see sellers pushing prices down from. So we understand that the buyers that came in at this point have been very convinced buyers, and obviously they've been more, or rather the buying volume has been more than the selling volume from this area here. That's why prices were able to break above that previous resistance area. What we see is prices first of all descending, or let's just scroll in just so that we look at that most recent price action just a little bit more in detail. What we see, if we just still reference that important lower structure over there, what we see is our prices basically descending towards this important level of structure. So we see a deceleration, a bounce, another bounce, then we see prices finally breaking back below this level of structure. Our first indication of corrective price action was when we saw prices breaking back above and closing back above this area of support. So now that we've seen prices breaking and closing above, we expected some corrective price action. What we then see is a nice descending structure and some momentum breaking to the upside. Now let's speak about this momentum, and we'll drop down on that 4 hour. We understand that we have that beautiful resistance trend line that was violated nice and impulsively on our H4, guys. What we have here is some nice beautiful structure for us to work off. So from the higher time frame, guys, we've seen that momentum pushing to the upside, being able to violate some previous resistance areas. So now we have a sign of strength in this market because we are able to violate previous areas where sellers sold from. So we understand that basically just by this most recent price action, buyers are involved. Now, because we understand that buyers are involved, let's just scroll in and look at our important levels of structure. So we see our resistance areas over here, prices coming down, establishing support, resistance, support, equal highs, support, equal highs again, and then we violate to the downside. We then establish more structure, come back to this set of equal highs, we show a reaction, and then we break above this level of structure. So this to us is a nice important level of structure, a nice resistance that the market has tested a couple of times, and now we're seeing a nice break above. So all we're expecting, guys, from a 4 hourly perspective here on AUDCAD is we want to trade in the direction of this new momentum. So what we'll be doing, guys, is we'll be waiting for this corrective structure to form and pull us into our area of value. Once we're in our area of value, we wait for that reversal structure to then give us a nice buying opportunity. And then obviously, depending on the price action, that will determine whether we're looking for those risk entries, which are entries that we take before prices have impulsed and broken levels of structure in our direction, or will we be waiting for maybe a violation of our resistance trend line, or maybe even a violation of some horizontal resistance, and then let the market turn it into support. How prices make it down into this area basically is going to give us that clue on whether we should be looking for a risk entry or a reduced risk entry. Nonetheless, guys, our bias is bullish on AUDCAD, guys, and we're gonna just wait for prices to come in and tap into our previous resistance areas, turn it into support, and then we wait for those reversal structures for that bullish continuation. So that's our bias, guys, on AUDCAD. Let's move on to the next pair, and that's AJ. Now, guys, on AJ, we're also looking for a bullish biased setup. Now, to get into the reasonings, we'll start off on the daily. And on the daily, guys, what we will see is a market that has been in a downtrend for a while, very long while, guys. We have this market establishing support, resistance, new support, new resistance, new support, some equal highs over there in this area here. And that's what makes this area very important to us, that we see equal highs being violated. So we understand that market is just hunting for everyone that was in the sell position from those areas over there. So we basically see market also by breaking above these previous resistance areas, we see AJ giving us that beautiful sign of strength. Now, if we jump down to the H4, what we will do is just observe our important levels of structure. So on our left hand side, we have support, resistance, we have a higher low, we have a higher high. We have then this market that violates all these levels of structure, and then we break back above these important key levels of structure. So let's also just mark out this important key level of structure over here, our extreme lows. And what we will see, or what we can conclude based off this price action is that yes, momentum has come in on the bullish side of things. We've given ourselves that nice beautiful sign of strength, guys. So all we should be waiting for at this point in time to trade in the direction of this momentum to come down into our area of interest, that nice beautiful reversal structure to come down into our points of interest, whether it's this support structure where we're looking for those buying opportunities from, or whether we actually even see prices coming down and giving us this larger time frame inverse head and shoulders, because we have momentum coming in from there. We have some support, we have equal highs, we have the head, so we could obviously be waiting for that right shoulder to terminate at this nice area over here before we see that bullish momentum coming in. But nonetheless, guys, we're bullish bias. The most recent level of support that we need to be looking out for those bullish continuation trades is this area over here. So that's exactly what we'll be doing. We'll be paying attention to how price is coming into this area and obviously what price does at this area. Those two pieces of information are going to give us reasoning whether we should be looking for those risk entries or those reduced entries. Nonetheless, the point of our analysis, guys, is so that we, number one, establish a directional bias, and number two, establish a point of interest where we're looking for the probabilities. If price comes down into that area, we then look to trade with our higher time frame directional bias. So guys, now that we've spoken about AJ, we have a nice bullish bias on AJ. Let's move on to the next pair that we're going to be having a look at, and that is Swiss yen. Now you guys will notice, guys, that on Swiss yen we're kind of going to be hedging some JPY strength, because if you guys remember, on AUDJPY we are slightly bullish bias. So let's get into our analysis, our top-down analysis here on Swiss yen. We establish that directional bias and then find those points of interest for us to be looking for trading opportunities next week. Now guys, to get into things here on Swiss yen, what we have is some nice momentum to the downside, violating some important levels of support over there. So we're seeing some nice sell side momentum from Swiss yen. After we've seen that sell side momentum, we've basically seen prices entering some sort of an expanding structure. Now we can mark that expanding structure out just so that you guys can reference and be able to see it with your eyes, whether it's drawn on our charts or not. So we've had this expanding structure, guys, where we were expecting some type of a nice third touch for us to be able to enter into those beautiful sell opportunities. But what we see when we drop down onto the H4 is a market that is trending in the direction where we're looking to trade, because we're looking to trade that sell side momentum. What we are seeing, guys, is on the 4-hour market establishing resistance up here, giving us a low, giving us a lower high, and we then have a new lower low. So after we've had this move to the downside, what we've then seen is prices kind of entering some sort of a sideways moving market. So markets reacting from this previous support area that market broke below, we've seen a reaction from this area over here. If we come into our most recent price action, guys, and this is the real reason for our directional bias and for our reasons of entry, what we will see, guys, is a market that, yes, was trending up, creating those lows, giving us highs, giving us higher lows, giving us higher highs, but now we have a new lower low. So we've basically seen a sign of weakness from this markets being able to give us a new low. After we've seen this move to the downside, we've then seen Swiss yen entering into the sideways moving market. Now guys, we do have a nice pair of equal highs in this area here, so we could still be expecting price action to come up, take out these equal highs, and give us that beautiful go-to setup by breaking back below structure, retesting our structure, and then we find those bearish trading opportunities so looking at the actual structure that we do have here, guys, if we do want to, we can establish a nice support trend line. But how I would be looking to manage the support trend line is just by not accommodating for this as a swing low as yet. Only if we do see prices closing back above this trend line can we then accommodate for this and say, yes, we do have a new swing low. And then obviously, if we do see that happening, then we can conclude that prices maybe want to come up one more time and then drop. So we might be able to even isolate a nicer, better looking structure. Nonetheless, we don't have that confirmed yet as a nice swing low, so let's just accommodate for the swing lows that we do have confirmed, which are those levels of structure over there. So you guys can see from a 4-hourly perspective, if we do have the structure marked out like this, we have broken and closed and managed to stay below the support trend line. So if we were on those lower time frames, like for example the H1, what we could be waiting for is for a beautiful continuation structure from Swiss yen. So waiting for prices to give us that confirmation, that nice continuation structure below our trend line before we find those bearish biased opportunities. Otherwise, guys, if we do see prices breaking and closing back below, then we know exactly what our point of interest then becomes. Our new point of interest then becomes above these equal highs that we see over there. So nonetheless, guys, looking at Swiss yen and our bias based off all the reasoning that we've had of Swiss yen, let's just go back up to the 4-hour. What we will conclude, guys, is that we are bearish biased on Swiss yen, waiting for prices to give us that opportunity to enter short. Whether we get that opportunity below our trend line or whether prices break back above our trend line, obviously causing us to adapt and accommodate for the new price action, we will still be waiting for either those continuation structures or those reversal structures. Nonetheless, our bearish is biased, and we just need to wait for price action to give us that opportunity to enter in this direction. Guys, that's our nice bearish bias for Swiss yen. So think about it in terms of our correlation. We're bullish bias on AJ, we're bearish bias on Swiss yen, so we're basically hedging that JPY strength, so that whether JPY is the major mover of the markets next week and whether we're moving up or down, we still have two different pairs that are giving us beautiful price action. So we're not imposing a bias on either one of these pairs. We're still trading the price action that we see objectively on our charts, but we're hedging some JPY strength, so allowing ourselves opportunities to trade that JPY strength or weakness no matter which market we see that strength or weakness coming in. So let's go on to the next pair and final pair that we're going to have a look at, guys, and that is our New Zealand dollar CAD. So with our New Zealand dollar CAD, guys, I also want us to think about and reference our bias that we have on AUDCAD. And before we get into things here on New Zealand dollar CAD, guys, we do have a nice, beautiful bullish bias on AUDCAD. So on AUDCAD, guys, we do have that bullish bias. Let's just go into our top-down analysis here of New Zealand dollar CAD, and and we'll start off, guys, on this daily time frame. So on the daily, guys, if we just zoom out just a little bit, what we will see is this nice support structure over here, this nice area of support. If we just accommodate for both of these lows over here, we have this nice area of support where prices came nicely, basically descending and decelerating as well towards this important key area of support. Then we see some nice bullish momentum coming out of this market. So what we then established, guys, that we were stuck within a range below these lower structures and above these, below those higher structures and above these lower structures here, we were stuck in some sort of a consolidation. What we can see, guys, is prices now most recently violating this resistance area, so this nice range that we've established here. But if we go down onto the lower time frames, guys, we will begin to observe the nature of this price action and then see that previously when we had this bullish momentum, we've seen some nice impulsive moves out of some important support structures. But most recently, when we've seen this nice new break of our range, we've seen prices doing that somewhat kind of correctively, because we've been moving a lot slower. Yes, we've seen the move to the upside, but this move to the upside has been a lot slower than previous bullish momentum that we've seen on this pair. For this reasoning, guys, we've identified a nice area of interest over here where we've seen market establishing some support and resistance. We understand that we have our extreme highs up here, where we'll also be paying attention to how prices are actually making their way towards this important resistance area. But nonetheless, guys, we're in and around an area where we could see some sell sensitivity. Of this reasoning on our New Zealand dollar CAD, guys, we're going to be bearish bias, obviously using this support trend line to manage this bias. What we will be looking out for, guys, on New Zealand dollar CAD is for some bearish price action somewhere above these areas over here. Once let me make sure my mic is properly plugged in. Once we see both our trade, or rather New Zealand dollar CAD, violating both this ascending trend line and maybe even some horizontal support structures over there, giving us some signs of some beautiful bearish momentum. At that point, guys, that is the time where we will be looking for those bearish bias trades out of New Zealand dollar CAD. So we still need to wait for prices to decelerate towards the upside, give us this beautiful reversal structure, and then begin to violate structure in the direction that we're looking to trade, which is bearish. And once we see that, guys, then we begin to start looking for those bearish biased trading opportunities. Now, one important thing, guys, that we need to mention about this bearish bias and New Zealand dollar CAD is that we'll try as much as we can to squeeze a 1:3 risk to reward ratio in between wherever we enter this market and these important support structures over here. Why? Because from a daily, if we look at this range that we've established, that we've broken above, this is our retest area of this range for our potential bullish continuation. So guys, we do still also have a nice potential bullish bias on New Zealand dollar CAD, but right now, because prices are super impulsive to the upside and we're at those resistance areas, it makes more sense for us to be bearish bias than bullish bias at this point in time. So guys, for our next week's trading opportunities, we're going to be focused on those selling opportunities on New Zealand dollar CAD. Think about what we're doing. We're looking for bullish bias trading opportunities on Aussie CAD, and obviously those bearish bias trading opportunities on New Zealand dollar CAD. So if CAD is the major mover of price next week and we see either some CAD strength out of these pairs, we'll be looking to buy into that, to sell into that CAD strength by trading our New Zealand dollar CAD. If we see that CAD weakness and we see all of these CAD pairs moving to the upside, we're going to be looking to trade that CAD bias on our AUDCAD. Why? Because AUDCAD is giving us a beautiful bullish bias that structure is also warranting us to begin to start looking for. So guys, we've reached the end of today's analysis. Hopefully you guys have received the value that was intended for you guys. Definitely do drop a like on this video if you have received some type of value, if this video has made you slightly a better trader and increased your understanding about something. Definitely do drop a like, guys. I will appreciate it. Otherwise, if it's your first time on the channel, definitely don't leave without subscribing, because you will miss the next analysis that we have here. You can't guarantee that you're going to come across it based off the YouTube algorithm. So subscribe so that you receive some notifications when we do drop new content. Otherwise, guys, appreciate you guys for watching until the end. This is Tremaine, your FX Chasers mentor. We'll see you guys in the future videos. Have a great week, guys. Cheers.